Good afternoon, ladies and gentlemen. I want to express my appreciation to the organizers of this forum to make my presentation on a topic which I have titled this way. I want to say that no bank would fail in Nigeria as a result of the new coronavirus, which is christened and COVID-19 storm. I want to maintain that position throughout the presentation, but I also would like to state that there are conditionalities attached to this position. I repeat, no bank will fail in Nigeria. So, this is my profile. I hold a PhD degree in economics from the University of Lagos. And I will give you some time to go through this at your spare time. Now, this is my opening statement. First, I am not a prophet by profession. I am also not a prophet's son. That's a popular it's a very popular cliché. This is the fight of health professionals. In other words, this fight against the coronavirus is a fight for health professionals, not that of banks or bank regulators. But that does not mean that banks and regulators don't have a role to play in this fight. As part of my opening statement, I would also like to state that unlike the 2008, 2009 global financial crisis, when banks were portrayed as the villains, the current crisis provides an opportunity for banks to be active and positive participants, helping both consumers and businesses to weather the economic storm. But again, the fact that no bank will fail in Nigeria does not mean there won't be challenges. So the question therefore is, so what needs to be done? Currently, I took the statistics of the number of banks in Nigeria, and I have these figures on this slide. Commercial and merchant banks, 25 in number, international banks, 3, the DFIs, that is the development finance institutions, 7, and the microfinance banks, 913. That's a very huge number. So which of these banks would fail and which one would not fail? I want to say very categorically that commercial and merchant banks, international banks, and the DFIs, none of these banks would fail. But of course, for the microfinance banks, I cannot be definitive. There will be challenges, but I'm sure that everyone working together will be able to weather the storm so that to ensure that none of these microfinance banks also run into a hitch. Here is my key assumption for what I'm presenting, that according to John M. Barry in his book, The Great Influenza, the epic story of the deadliest plague in history, he had this to say, that if there is a single dominant lesson from the 1918 epidemic, it is that governments need to tell the truth in a crisis situation. Those in authority must retain the public's trust. The way to do that is to distort nothing, to put the best face on nothing, to try to manipulate no one, and so on and so forth. This is an important quote, and everything boils down to the issue of trust. And I must say that in Nigeria currently, a lot is being done by the authority to disseminate information that is both accurate and credible. That way, we are building trust. Now, what is really true about banking in times of crisis? We need to tell ourselves what these truths are. First of all, banks are like black boxes. What does that mean? Outside observers know little about the value of their assets, especially in the aftermath of a shock, like a broad-based plunge in asset prices. As a result, bad news can lead depositors to question the solvency of their bank. So what this simply means is that banks are like black boxes. And not many people seem to have enough information to be able to reach a conclusion as to the state of health of a particular bank. That is true in any banking crisis situation. Second, banks are also, they can also be vulnerable. And the sequential process for this vulnerability, it has to do with, when customers try to redeem deposits at face value, that in itself creates what is called a first mover advantage. Now, those who get to the bank first get paid in full, while those who are patient or just slow may receive nothing. This leads to what is commonly referred to as bank run. We are not seeing, and we are not going to see that situation in Nigeria. What is more, the COVID virus itself, any viral illness, bank runs are contagious. The news about a run in a specific bank can alert everyone to the fact that there may be other lemons among the universe of banks, turning a run into a panic. So that in itself can create what is referred to in the literature as a systemic crisis. We do not have that in Nigeria, and we are not going to have that as well. So if you put all of these things differently, when people have insufficient information, or what you refer to in the literature as information asymmetry, shocks can cause them to behave in ways that exacerbate or amplify rather than dampen disturbances, or what you also call perturbations. Even if everyone believes that most banks are solvent, or certainty about this bank or that bank can be enough to motivate a run. So this picture is true of every country. Whenever there are banking, whenever there are crises, and banks respond, or the environment of banks, seem to have this kind of picture. But like I said, we do not have that in Nigeria. So what are the key concerns? If we do not have this kind of situation in Nigeria, what are the key concerns? These key concerns run across the globe, and we have very, very important authorities, senior authorities in the world, especially in the consulting field, and of course the American Banker Association. They have been able to raise these important concerns. The first one, by Euromoney, says that banks came into the coronavirus pandemic much stronger than they went into the global financial crisis. And I agree with this. But will the capital and liquidity buffers they have built be sufficient to see them through the most dramatic economic crash in history? That's a good question. What the point really here is that many banks also in Nigeria have been implementing the Basel I, the Basel II, Basel III, and some of them even Basel IV Capital Accord. A key element or pillar of these accords, especially the Basel III Capital Accord, is that banks must be able to raise their capital and liquidity buffers. And I can tell you authoritatively that many banks in Nigeria were able to do so. So many of these banks have come into this coronavirus in a much stronger and better position than what happened in 2008 and 2009. Now, the American Banker Association had this to say in their journal, The American Banker. It says that the longer the COVID-19 lasts and the more severe it becomes, the more likely that the health of financial institutions and the ability to support the economy will suffer as well. If that happens, it could detonate a string of risks already embedded in the system that could ripen into a severe financial crisis marked by shrinking lines of credit and liquidity constraints. Yeah, of course, these are genuine concerns, and I cannot agree less with the American banker. And finally, at Accenture, they have just conducted a risk modeling in which they reached this conclusion that banks may see half to all of their profit margin disappear this year, that is 2020. All of these concerns are real, but I must say we do not have those concerns in Nigeria. Why do we say so? Following the outbreak of the COVID-19 globally, the CBN quickly took steps, to put in place robust, framework as well as, intervention in order to cushion the effects of COVID-19. And I'll quickly take us through some of these actions of the Central Bank of Nigeria. First, all CBN intervention facilities granted moratorium of 1 year on all principal repayments effective March 1, 2020. What this means is that all the intervention facilities which the CBN granted or gave to so many financial institutions are to be given moratorium. That means a period of grace of 1 year. So they are not expected to make any repayment until March 1, 2021. That is a very good one. Second, interest rates on all applicable CBN intervention facilities reduced from 9% to 5% for 1 year. In other words, those intervention facilities are to enjoy, a reduced interest rate, now 5% from 9%. That is also a very good one. And that, of course, is going to breathe fresh air to banks in Nigeria. The third is that it has established a 50 billion naira targeted credit facility through the Nassau Microfinance Bank for households and SMEs vulnerable to the COVID-19 pandemic. The fourth action of the CBN is that it has opened intervention facilities and loans to pharmaceutical companies intending to expand operations and set up drug manufacturing plants. You'll be right to say that this is an intervention and support for the health sector, not directly, impacting banks, but it's also a very good intervention. The CBN has also granted deposit money banks, that is commercial banks, leave to consider temporary and time-limited restructuring of the tenor and loan terms for businesses and households mostly affected by the outbreak of the COVID-19. What that simply means is that commercial banks do not need to make provision, and therefore that is going to breathe, fresh air to banks as well. So once you are not providing, it is not going to affect your capital so much, and of course your profit will not be touched by those bad loans. And finally, the CBN has also strengthened the LDR, that is the loan deposit ratio policy, to support credit growth. The CBN is going to further support industry funding levels to maintain deposit money banks' capacity to direct credit to individuals, households, and of course businesses. This is a very, very robust package, and this is what gives me the comfort in saying that many banks in Nigeria, or virtually all the banks in Nigeria, are not going to fail. But this is not all of the reasons why I hold that position. There are a lot of things that we still need to do in order to ensure that no bank fails in Nigeria. The first thing is that the most effective mechanism to arrest financial contagion driven by solvency concerns is what is referred to as an extraordinary disclosure mechanism. Stress tests that aim to reveal banks' true condition are the most powerful such tool. What this simply means is that the Central Bank of Nigeria should start to activate the stress testing of banks, across the board. And now the whole essence of a stress test is not to reveal whether one bank is having a challenge or the other. It is to be used as a risk management tool to say that if a bank is stressed, for instance, is under stress, then the central bank can take immediate remediation action to make sure that the bank does not fail. That is one thing I think we need to do very quickly. Now, also, the CBN should consider putting in place a standby bailout mechanism to support a failing institution, not a failed institution, but a failing institution. Experiences all over the world, confirms the fact that when you have a standby bailout mechanism, that is a very proactive measure which any regulator can take to prevent the failure of any bank. Banks should be ready to activate their contingency funding plan. I know for sure that as part of regulatory requirements, all commercial banks and also merchant banks are meant to have contingency funding plan, because one serious issue in a crisis situation is that of a funding liquidity challenge. So this will be the time for banks to activate their contingency funding plan in order to obviate a serious situation. Banks also should begin to that experience capital and liquidity deficiencies should be given time to come back into compliance so that they can afford borrowers the time to get back on their feet. What that simply means is that the compliance and reporting requirements by central bank should not be made too stringent at this point in time, so that banks will be given a leverage or a leeway for them to be able to put such reporting mechanisms in place so as not to bore them down. That way, they will not also they will also not be putting undue pressure on borrowers, so as not to lead to a systemic crisis in the system. Of course, also CBN should suspend non-essential regulatory compliance requirements to free up an army of bank employees that handle regulatory compliance on a day-to-day basis so that they could address the emergency in a more effective way. Then, of course, there is what is referred to as practical common sense action. And this common sense action will always require a liberal dose of regulatory and accounting forbearance so as to get banks and everyone through the crisis. That is a standard practice anywhere in the world. Banks also need to be proactive in modifying laws for consumers in need rather than wait for the government to ask. Banks can use a data-driven approach and also a technology platform to understand which customers need help and then rapidly reach out with tailored, relevant solutions. Then, of course, banks should use this particular time that we have now to build capacity to manage delinquent and defaulting loans. And finally, banks should be mindful not to waste money on disposable responses. Disposable responses are short-term responses. Rather, they should focus on the future in the kind of responses that they would like to take. So, with all of these, I'm able to reach this conclusion once again, that no bank will fail in Nigeria. And I bet you mark my words. So what you can do for me at this time, go to YouTube, like my post, share my post, subscribe to my YouTube channel. Finally, stay safe. This COP will pass over us. Thank you very much.